Hi traders, Nathan Bray here from ACY Securities, and as you can see behind me, the inflation fire keeps on burning right across the globe. Starting off with yesterday evening Sydney time, we had the UK annual CPI inflation data come out, and it came out higher than expected, up around 9.4%. Now, if you have a look at the PPI or the producer, so the consumer price is up and the producer price often then is a lagging indicator, and it will feed into what the consumers are paying. And at the moment, for both the input and the output, being factories for producers, are way higher. In fact, I believe the input, it's the highest it's been since 1977. I was 2 years old in 1977, and for the output, I believe it's about 1985. So we're seeing this inflation burden continue on. Now, also later in the evening, we had Canada come out with its consumer price index, and it's continuing higher. It wasn't as high as expected, but it was up on the month before. And again, you've got situations where the CPI or the inflation data, it's like 40-year highs. So we do have quite a problem. Now, the issue I've got with it is our experts at the Reserve Bank and the central banks and treasury governments around the globe were all telling us, when they were asked the question, hey, if you print all this money, isn't that going to translate into an inflation in money supply? And they said, oh, of course not. It'll just be temporary. Then, as it wasn't temporary, they changed their mind and said, no, it's just transitory. And then they've now changed their mind, saying it's now peak inflation. Yet the figures we're getting over the last couple of days are suggesting it's continuing to power on. So far they have been wrong twice. My question is, what's going to make them right the third time and this actually be the peak? All the data and all the trend is sort of pushing to suggest that this inflation, even though it might peter out for a short term, is here to stay, and we're in a crisis mode. You only have to look at how that's affecting governments around the world. Look at Sri Lanka. Their government's gone, okay? You look at Japan. We had the creator of Abenomics literally shot in the street. We've got Macron being asked by his prime minister for a resignation. We've got Joe Biden, the lowest polls for a US a president in years and years and years. We're talking decades on top of decades. And of course, Boris Johnson, he's gone. So we're seeing an effect where once you start burning people's money in their pockets, okay, are they going to start to revolt? Are industries going to be forced to lay people off? So this is the scenario, and tonight I'm keeping a close eye on the Euro news. So are we going to see, as a result of inflation in Europe and around the world, the first time that the ECB is going to raise interest rates in about a decade from zero? So if that happens, we've seen a nice snapback in a lot of the major currency pairs, a bit of weakness in this US dollar, but I think keep your eyes on this Euro interest rate announcement and their monetary policy announcement. What are they going to say, and what major effect could that have on the market? Good luck, traders, and good luck with inflation.